Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Vishnu Varathan, Head of the Economics and Strategy at Mizuho Bank in Singapore. Happy Monday, Vishnu. Welcome to the show.
Happy Monday, Brian. It's always good to be here. Thanks for having me on today.
Now, Vishnu, before we get your insights, let's take a look first at how crypto markets are performing and then swing around the region and look at regional markets. We're going to start with Bitcoin, which is at just above 60,000, 60,492. It's down 1.5%. Ethereum is at 4,227.97. It is down 3.2%. Across the region, we've got the Nikkei, which is at 29,580.9. It's up 2.38%. The Shanghai Composite is at 3,549.93. It is up 0.07%. The Hang Seng is down 1.1% at 25,098. The ASX 200 is at 7,374.8. It's up 0.7%. The Kospi is at 2,986. It's up 0.53%. Closer to home, we've got Bursa Malaysia, which is down sharply 2.11% at 1,529.35. And rounding up the numbers, we have the Straits Times Index in Singapore, which is at 3,224.79. It's up 0.83%. Now, Vishnu, what's your view on market performance, which seems very mixed across the region?
Hi, Brian. Yes, it is a good point. I mean, markets are pretty, undecided about where they're headed this week. There are, of course, a few reasons. One of it, of course, has been setting itself up for a while now. That is the FOMC meeting. So the Federal Reserve is poised to announce taper. So there may be some caution as markets await to see what the details are, what they say about inflation, whether or not they drop any hints about rate hikes that may be taking place next year. So these are some things for caution, but I think this, over the weekend, seeing China's PMI data showing activity decelerating quite sharply, manufacturing in an outright deeper contraction, and services also slowing down, into the power crunch amidst other regulatory tightening, also perhaps has got markets a little bit on the defensive. And I think the obvious question there is how much of a spillover the rest of Asia may anticipate from this. So those are reasons that markets are nervous. Other than that, however, markets appear to have been by and large, save for some of the tech disappointments, with earnings season and the still flush liquidity is keeping things buoyed in the equity markets. Even if in the bond yield space, you've got short or front-end yields moving up quite rapidly. So a lot of things are moving, and I think this is where markets are turning a lot more cautious to pay attention to details and very wary that things can turn on the drop of a hat.
Now, Vishnu, I want to zoom in on a market which basically is a little bit of an outlier compared to its normal performance, which is Bursa Malaysia. It is down more than 2% today. What is your view on why that is the case, and is that somewhat influenced by the budget that was announced on Friday?
I mean, those are good questions, and perhaps ones that may not have a very firm answer. Let's take a step back and look at what has happened in the markets. I think some of the China scare filtering down into commodity prices and oil are reasons for a little bit of caution and hold back. That's one factor. The budget raises its own issues. Overall, the budget is positive for two big reasons. One is there is some degree of consolidation taking place. In particular, that is also helped by the windfall oil revenues rather than belt tightening. So the budget is going to a better place. However, the higher debt ceiling that's required to transition may be a cause of concern. But the budget is also very supportive of growth, which is a good thing for this transition to come out strongly of COVID. So these are reasons why we think the budget.
Vishnu, Vishnu, sorry to interrupt you, but what are the key points that you see that are conducive in the budget for stimulating growth?
Well, I think by and large, the budget remains very supportive of finance businesses, for credit liquidity rollover, And so there, the focus remains on ensuring that you don't prematurely allow businesses to go run into a liquidity crunch, then affects solvency and spills over as job market issues. So those are having the big parts of the budget in place. The digitalization move forward also means that a fast growth can take place in the faster growing aspects of the economy. The holdback factors may be that there's still no clarity, and it's still going to be a very difficult recovery for like travel tourism sectors. That's one. And also the component of direct wage supplements and support is also seen to be diminishing. So I think that may be giving rise to a little bit of consternation amidst background questions about saving levels and adequacy to see through the rest of the year. But by and large, the intent behind the budget to transition from something that's a emergency backstop to one that's set for a strong recovery, that thought process and that intent, I think it remains very positive for us.
Vishnu, one thing I've got to ask you, which seems to not have a lot of prominence or less prominence than usual, is the G20 meeting. What's investors and analysts' view on what's happening at the G20?
I think, investors, analysts, and market watchers are all very aware of the progress that's being made, in the global minimum tax. So there is an understanding that going forward, the framework would be one of not having tax havens or undercutting tax, and really getting companies to pay their fair share. This was actually in some way born out of tech companies seen not paying their fair share, internet companies not paying their fair share, so on and so forth. But the lack of focus tells us, it's very jarring. It tells us that a newspaper editor would justifiably see this as a headline, yet markets have just looked past it. And that tells us that a lot of the near-term focus remains on two issues. One is really the big backdrop of inflationary pressures, power crunch, supply chain kinks. This has hijacked the entire economic agenda. And the second point is the policy response to that. So markets are just waiting on the edge of their seats to see how the Fed would respond. Do they get hawkish? Will they make a policy mistakes? So from policy dilemmas to policy mistakes, that's really what markets are paying attention to right now.
And finally, Vishnu, with the start of the new month and the start of the week as well. So what are the key data points and events that we should look at this week that will move markets? The FOMC meeting obviously being one of them.
Thank you, Brian. That's a great way to start off FOMC indeed. So I think this week is really going to be about show me the money, right? So that's the FOMC telling you how much money they're going to show you over the next few months in terms of the QE and the taper. Before the FOMC Wednesday, the RBA has got a very pivotal meeting because bond markets have been pushing up the 3-year yields, which ought to have been anchored at 0.1% by their YCC, yield curve control. So what the RBA does here in terms of whether they intervene and pull it down, or they say, look, we are no longer using this anchor because it's not applicable, and also how they make stand about not having or not looking at any rate hikes in the near term, because markets are aggressively betting that the RBA is wrong and that they will have to hike soon. But the RBA said, look, we won't hike at 24. Huge gap between markets and the RBA. How the RBA bridges this gap would inform us a lot about what policymakers are thinking about, and in between what kind of volatile correction we could see. So you would see a lot of volatility in bond yields spilling over into the currency markets, and much of that may be concentrated at the front end, the short-term interest rates, because those react very deeply and sharply to policy decisions, particularly rate hikes.
Now, Vishnu, as always, thank you very much for coming on the show.
My pleasure, Brian. Have a great day.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out our various platforms as well as our website, www.biztech.asia. Please like and subscribe to our various social media platforms. Thank you very much for tuning in.